Welcome to Motley Fool Money. Thanks for being here. I'm your host, Chris Hill, and joining me in studio this week from Motley Fool Inside Value, Joe Magyer, from Motley Fool Income Investor, James Early, and from $1 Million Portfolio, Ron Gross. Good to see you guys.
Good to see you, Chris.
We have got a retail roundup. We've got an embattled CEO hanging on for dear life, and we are inching ever closer to machines ruling our lives. And as always, we've got a few stocks on our radar, but we begin this week with the fiscal cliff. And when we think about the fiscal cliff, guys, I think we may be looking through a slightly different lens than some of the mania that you see on TV, because what we're seeing, and James, I'll start with you, what we're seeing is a wash of special dividends just flowing all through the market. This week alone, Whole Foods, Costco, Brown-Forman, and Las Vegas Sands were among the big names announcing special dividends to be paid out before the end of the year. What do you think about this? I mean, is this like Christmas and your birthday wrapped in one?
It's quite a lot. I mean, first of all, I wish I had $1 for every time fiscal cliff was mentioned. I could pay for Ron Gross's personal trainer budget for half a year. The special dividend is sort of a wash. If a stock is $100, it pays a $10 special dividend. On the ex-dividend date, it drops to $90. So it's like, all right. You know, you get taxed at the dividend tax rate, which is currently just 15%. Now it might go up. So I understand why they're doing it. I don't think it's something to be excited about. It's sort of a neutral that shows some shareholder friendliness, but I think the frenzy, Chris, is a little bit overblown.
Ron, what do you think?
What I love is how companies like Costco are playing both ends of this. They're paying the dividends in advance of a potential tax hike, and they're also taking advantage of quantitative easing by the Fed by taking advantage of the lower interest rates, taking on debt, bringing debt onto the balance sheet, and using that cash to pay out special dividends. Really a very shareholder-friendly action.
Weird too.
I was going to say, Joe, is that cause for concern if you're a shareholder? It's one thing if you're Apple and you've got tens of billions of dollars on the balance sheet and you have the ability to just pay it out. It seems a little shakier from an investor standpoint if the company is, I'm borrowing money just so I can pay it out again.
Well, it depends. If you're a strong business like Costco, it makes sense and it's okay. But you look at Amazon, they just raised a few $1 billion for the first time since the late 90s in the debt market. They got 10-year bonds yielding 2.8%. That is absurdly low. I wouldn't lend money to my family at rates that low. It's just remarkable. But it's value adding for them because after tax, it's just an incredibly low source of funding for them to grow the business.
I want to get to companies that have not yet hopped on this bandwagon in a second. But Ron, when it comes to the fiscal cliff, I refer to the mania on TV. What for people who may be members of Motley Fool Services, they know that we have discussion boards that investors can just interact with one another. What are you seeing out there in terms of investor sentiment? How nervous are people? How much is this whole fiscal cliff conversation changing the way people invest?
I'm saying a lot of volatility in the market as a whole. The stock market will trade up one day on hope and next day down on fear. Anecdotally, we're seeing on the message boards people delaying purchases of stocks because they don't want to commit capital in advance of what could be a potentially bad situation. This time last year, I made a prediction. I'm going to go out on a limb again. I think everyone should take a collective deep breath. This is going to get solved in time. My guess is that what happens is the $250,000 threshold for increased taxes for income people will get raised to somewhere around $400,000. That will be the compromise that's required to get this done.
All right, let's go back to the companies who have not yet made the announcement that they're going to pay a special dividend. And let's face it, there are companies out there that already have the cash on the balance sheet. So let's just call a few companies out. Ron, I'll start with you. Who should be thinking about paying out a special dividend?
Absolutely. I would love to see one from Activision, ATVI. Stock goes nowhere, ever. But there is over $3 billion of cash on the balance sheet, no debt. It does not need that amount of capital raised to run the business. They could easily pay out $2 billion or almost $1.80 per share on $11 stock. I'd love to see it.
James, what about you?
There are a lot of cheap what's out there. I mean, Apple, Google, Intel, these all have just billions and billions of dollars. And what are they going to do with it? I mean, they should pay this out.
Joe, what do you think?
I was going to pick on Apple. They got about $120 billion in cash. There is nowhere to redeploy that money. They have initiated dividends to their credit, but that you could buy Twitter a few times over at that price. Yeah,
if you wanted
to. A week ago, all of the focus was on Black Friday, but Joe, it seems like Cyber Monday has stolen the thunder of Black Friday because About $1.5 billion was spent online on Monday, which makes it, according to ComScore, the biggest online shopping day ever. When you step back and look at the holiday retail universe and how things have kicked off this year, what do you think?
Well, it depends on where you're situated. It was amazing to see how people got so focused on watching people in line at stores on Black Friday when foot traffic was only up 3%. The real action is online. The same day Black Friday sales were up 20%, Cyber Monday 30%, and that's just extraordinary growth, but it's important to remember online is still only about 5% of total U.S. retail sales. Globally, 2/3 of people don't have internet access. So there's still just an incredibly long runway for these online retailers to just keep eating up share.
Have you bought anything online for Christmas yet?
Not for Christmas, but I'm a chronic Amazon Prime buyer.
Ron?
I found it so interesting on Black Friday. I went into an Apple store to buy an iPad mini, and there weren't any, of course, but you could order it online. Great deals, actually. They were offering really great discounts. So I walked outside, just stood outside the store, and me and several other people were there on our smartphones going onto the Apple website to purchase the iPad mini. So what would have been a brick-and-mortar purchase turned into an online purchase, which is because
From
they were out
poor
of stock.
inventory management.
It was
Why
very
did you
interesting
want to do
me.
that? You just wanted the experience of buying it in the store?
Well, I was in the store, and I wanted the immediacy of
I see.
of
Oh, for
owning
yourself.
it instead
Yeah, the
of
pleasure of
instead
having it that
2 or
day.
3 weeks
Okay.
down the line.
I do.
Plus, it was Thanksgiving weekend. Probably wanted a little, me
Little time
just
off,
to get away
yeah.
from the Gross family.
No, they were with me.
I do want to give a little shout out to mobile sales. They were 13% of online sales this quarter or over the holiday weekend. And again, you need to right size that in terms of the overall size of the retail market. But they still doubled year over year. And I think that's definitely going to be the new online sales over the next 3, 5, 10 years.
I was going to say, when you look at bricks and mortar retailers, Walmart, Target, et cetera, they all have their own online operations. What is the move for companies like that? Is it just to try and increasingly push out online sales?
Well, Walmart's the second biggest U.S. retail online player behind Amazon, but by a pretty long ways. And ComScore said that Amazon grew faster than any of the other top players this quarter. So it would seem that Amazon is actually outdistancing their competitors right now.
Reports this week that Microsoft will cut its order of Surface tablets this year from 4 million to
4
to 2 million.
They're that good.
Ron, I'm not much of a numbers guy, but I'm pretty sure that's cutting in half.
Houston, we potentially have a problem. Gosh, where do we go? Microsoft, there's a bit of a dichotomy going on. They've announced that sales of Windows 8 licenses topped 40 million, which is pretty strong. It's actually stronger than Windows 7. I'm hearing a lot of buzz, or reading a lot of buzz, I should say, that people are saying, we just don't see how that's possible. Sales of Windows devices are very weak, perhaps down 20% or so. So things are perhaps not as rosy as Microsoft is making them out to be. I'm certainly not claiming they're giving misinformation, but there's something here that doesn't fit. A lot of the things that we were hoping to see are not playing out yet. Let's see how the holiday seasons go. But, as I've said often, I'm not a cheerleader of Microsoft. I'm an analyst, and if things aren't going well, then we'll make
Is
a
the
decision.
Surface the next Zune?
It could be, but the
We
Surface
predicted
doesn't.
it.
The Surface, in and of itself, is not a huge mover of the needle to Microsoft, but it is an indication of the product offerings. People moving, people
How
moving
poor they
away,
design theirs.
moving
Yeah.
away from PCs to tablets, but not their tablet. So it's an indication of other things than just the bottom line that the Surface would potentially create.
And it's not a big needle mover, but Joe, we also saw reports this week that Microsoft in some ways is doubling down on the Surface tablet because there's a new version coming out in January that's bigger, heavier, and over $1,000. That seems like the wrong way to go.
Yeah, absolutely. So the price point is about $1,000 when you include the cost of the keyboard. Now, this is a Wi-Fi only device that's heavier than the existing one, has short battery life. I'm not sure who gets excited about buying this device. I think it's just another example of Microsoft missing the mark on what consumers want. And I understand that they need to protect margins because they can't just go out there and give away the OS for free. That's
Right.
where they make their money. But this is a different world. It's not PCs, and they're just going to have to accept that.
Ron, just to wrap up on Microsoft, the stock, is the thesis for investing in Microsoft really one, I guess, of tempered expectations and dividends?
The dividend is certainly nice. Our thesis has always been that the price is priced for no growth. The stock is priced for no growth, but the company is actually growing 5% last year, for example. The office business, 7%. The server business, 12% last year. This first quarter here of this year, their fiscal first quarter, was not good. So the question is the growth we saw last year waning? And then that would completely change the thesis.
The Motley Fool's annual Worst CEO of the Year contest is underway on Fool.com, and 3 of the 8 finalists were in the news this week. They're up next. Stay right here. This is Motley Fool Money. Welcome back to Motley Fool Money. Chris Hill here in studio with Joe Magyer, James Early, and Ron Gross. In 2010, guys, Facebook and Zynga signed a deal that gave Zynga privileged status on the world's #1 social network. On Thursday, the two companies amended that deal, and Joe, based on the fact that on Friday shares of Zynga were falling, I'm assuming that it was a bad deal for Zynga.
You know, I actually like this deal for Zynga. When they signed it originally in 2010, I just felt like they gave away the farm. I thought they gave away too much to Facebook by making themselves Facebook platform reliant in terms of the games themselves and by using only Facebook credits. I don't know about you guys, but I don't typically pay for things with Facebook credits.
Not at all.
I use credit cards. I use PayPal. So by moving off of this, it's going to allow them to carry games with other providers exclusively and keep more of the dollars flowing through their games. It's a big risk because now Facebook could start producing their own games. They say they won't, but they eventually will. They'll get tempted and put some out there.
So that's the reason the stock is down.
Yes, and that is a big risk for sure. But compare that to the alternative, which is just staying on the dole forever to Facebook and never having your own independence. And I mean, at some point, it's just like you got to move out of your parents' house and take a shot downfield in life, and they're doing that. And I give them credit.
It really does seem like that. But to James's point, I do see why the stock is down when you factor in that roughly 80% of Zynga's revenue to this point has been coming from Facebook.
Well, I mean, that's why we've been trashing the stock since the beginning.
Speaking of Facebook, shares of Facebook up about 30% in 1 month. Is it of interest to any of you guys, or is it still in that infancy stage as a public company where you want to see more quarter after quarter of delivering, particularly when it comes to mobile?
It was of interest to us 30% ago. We quite frankly didn't move fast enough on it, but we're still thinking it through and at least want to do our homework so we're ready if we get an opportunity.
Yeah, in my mind, Facebook is still an IPO. It's not yet a real company in terms of consistent profit from my perspective.
Mark Zuckerberg from Facebook and Mark Pincus, CEO of Zynga, they're 2 of the 8 finalists in the Motley Fool's Worst CEO of 2012 competition. That's on Fool.com right now. The third is Andrew Mason of Groupon. On Thursday, Groupon's board of directors met. It was a regularly scheduled meeting, and shares rose 20% on reports that the board was going to discuss whether or not to replace Andrew Mason as CEO. When the news broke that, in fact, he was staying on, shares fell on Friday as a result of that. So
that's gotta hurt.
James Early, what do you make of this?
It does have to hurt, Chris, but I've got news for the board. It's not the CEO, it's the business. I mean, Groupon's business model would be gasping for air under any management. It's just not effective. Groupon is still profitable, which is great, but the growth has slowed pretty dramatically. I don't know how long the profitability will last. This is a company with 12,000 employees, $2.5 billion, I want to say, in revenue, something like that. And Andrew Mason used to be a billionaire. I think he's now a 213 millionaire because the stock is down almost 90% since the IPO. It's still pretty good, but that's like downgrading from like a 4-bedroom house to a 1-bedroom house. I just don't see the party lasting much longer.
Joe, to that point about the number of people they have on the payroll at Groupon, Living Social, which is not a public company, but Amazon has an investment in it, announced this week they're laying off 10% of their employees. Do you agree with James?
They're all headline writers for ziplining trips.
To James's point, do you agree that it's less Andrew Mason and more the overall business model?
It's both, but I definitely agree with his point that it's the model itself. And, this business just went public too soon. Companies are supposed to work things out before they go public, and Groupon didn't. They took the easy money. I don't blame them. I would have done the same thing. But that's what happens when you take a company from start to public in 3 years.
Where does Groupon, the stock, fit on your value continuum? Is
Low.
Are they on the value continuum?
Ulta Salon Cosmetics and Fragrance is a company I'm pretty sure we've never talked about before, and yet third quarter profit came in much higher than expected this week. Shares were up on Friday. Ron Gross, this is a stock that's on your radar.
Yeah, we actually bought it yesterday, earlier this week in advance of this pop in the stock, so we're really happy to see that. Really strong company that are continually putting up great numbers, like same-store sales of 8% increase and sales up 22%. Their main competitor would be a Sephora or online companies, but they offer cosmetics and beauty products as well as salons. And it's a relatively big box kind of store, lots of inventory, great customer experience. So we really like it. We just took a small nibble here because the valuation perhaps is not where we would love it for a full stake, but we're watching it really closely.
In terms of customer experience, they have a men's line.
There are things in like shampoos and things like that that certainly a man could use.
I have to push back slightly only because Jim Cramer on CNBC this week called this the ultimate growth stock. And when I think about Ron Gross, value investor, this does not seem at all like your kind of stock.
That's fair. $1 million portfolio is not only a value portfolio. We like to draw from all different Motley Fool services, including growth. There's 450 stores here. We think they can probably get to 1,200, so nice long growth runway here. It makes perfect sense to us. So it's not like a technology kind of growth play. It's a retailer. I can get my hands around that.
Finally, guys, as if there was any doubt, we are one step closer to our robotic overlords. Scientists at the University of Cambridge are proposing a new research center that would study the possibility that technology could destroy human civilization. And I'm quoting from one of the scientists here in the press release. He said, "You're more likely to die from robots than from cancer." What do we make of this? I mean, this is first of all, I'm kind of glad that someone's on top of this because I watch movies. It's clear that the machines will rise one day, and I'm glad that someone is paying attention. But
as long as I can get them to do my Christmas shopping, I'm okay with it. I mean,
that's how it starts, James.
I think
it starts with
overblown.
them being
It's a very
overblown.
slope, and then all of a sudden nanobots are in your bloodstream. How do you like that?
That sounds scary.
Yeah.
Joe, what do you make of this story?
I don't know anyone who's been killed by a robot, but unfortunately I know people who suffer from cancer, so I think that previous factoid is a little interesting.
Alarmist, perhaps?
Yeah, maybe a little alarmist, but I've
And
definitely...
these are seeking funding for their center. Is that why they're making these statements?
Yeah.
I'm not entirely sure, but I mean, to that point, before the robots rise up and kill us all, let's see if we can profit a little bit. I mean,
in the meantime, they're stealing all our jobs.
Well, I mean, you look at companies like Intuitive Surgical, Medtronic, Arrowhead Research. There are companies out there that this is their business. I mean, is there a play here, Ron? Can I make a little money in the robots before they rise up and destroy me?
I'm sure you could, and you just named companies like Intuitive Surgical that are great plays. I love what Amazon is doing with robots in their warehouses and really creating efficiencies by making the robots do all the work there.
Do you have a favorite robot from entertainment culture?
Yeah, what's that really old show? Will Robinson?
Yeah, the robot on Lost in Space.
Lost in Space. There you go.
James?
I don't. I used to like R2-D2, but it's kind of like we had a falling out just in my mind. So I don't have one now. Yeah.
Joe Magyer, favorite?
I know he's a villain, but T-1000, come on.
That's the Liquid Terminator?
Yeah.
And you, Chris?
I always had a soft spot for Rosie the Maid on
Jetsons.
the Jetsons.
Nice.
Sure. Drop us an email, radio@fool.com. Tell us your favorite robot. I'm Chris Hill. Joining me in studio once again, Joe Magyer, James Early, and Ron Gross. And guys, we will bring in our man from the other side of the glass, Steve Broido, because it is that time. It's time for the stocks on our radar. Ron Gross, you're up first. Steve's going to have a question for you, so I hope, unlike most weeks, you actually prepared.
How dare you? On my radar is a company called The Fresh Market. And it's ticker symbol TFM, and they're a boutique grocery store. Have you ever been?
I have not been, but I know it's a cheaper stock today than it was a week ago.
All right, so that's what's caught my eye. One, I personally like to shop there. One has opened up in my neighborhood relatively recently. Plus, the stock got slammed about 15% this week on less than expected earnings. But come on, sales are up 22%, net income up 19%. Company's doing fantastic. Valuation is the tricky part. See how much growth runway they have, how many stores can they open. But it definitely came up on my radar.
And the ticker symbol?
TFM.
Steve, question about the Fresh Market?
Yes, how does it protect itself from, I don't know, maybe a terrible winter or two in Florida? I mean, if you're selling produce, you seem at the mercy of Mother Nature.
And Mother Nature, I think, as we all know, can be a cruel woman.
It's obviously, it's not just produce, but as a typical grocery store would, obviously a part of their business is produce, but has the prepared foods and some of the dried goods as well. It's supposed to give you kind of like that boutique feel. It kind of feels like a Balducci's, if you will. And, obviously they would jack prices up if something's scarce, like strawberries or blueberries or things like that. They would adjust prices. But nowadays, you can source products like that from quite a few places.
Do you have a go-to? Because I've never been to one. What's your go-to item when you're shopping in there?
Well, what's interesting is that there is no meat counter. Anything you want, including ground beef, you have to go to the man and say, "I'd like a quarter pound, a full pound, whatever you want." So nothing is prepackaged in cellophane.
Got it.
So everything is really nice and fresh.
Because for a second there, I was going to say, that sounds like a place Joe Magyer and I will never, ever go. James, early your stock?
Chris, I've been talking a lot about Giant Interactive lately. The ticker is GA.
I haven't heard you talk about it once.
You haven't? Okay, well, now I am. Chinese, it's a recent income investor recommendation. It's a Chinese online video game company. Up to 1 million people can play these games at the same time, and the games are typically free. They make money when people buy the lucky charms, like the charm staffs or the swords to chop up the bad guys. And this is actually pretty big business. These people get addicted. This is run by a math genius billionaire guy named Yuzu Shi. He and his daughter own 55.5% of the company, which is actually reassuring for people who are worried about Chinese stocks, about a 5 or 6% yield also, depending on the day.
Sometimes I think he makes these up. Is it real?
This is real.
Okay. I can't confirm or deny it.
Steve,
I
question?
think I actually read this in your recent Income Investor newsletter. I was reading this, and my thought was, I don't know if I trust a dividend coming out of China. I know that's maybe not the most polite thing to say, but it seems like we've had so much concern over the reliability of the Chinese economy.
And your question is?
That's just a statement.
Oh, okay. Well, technically, it's a Cayman Islands company.
Does that make you feel better?
So what could go wrong?
The dividend is also net of taxes, too, so you get all that. There's no withholding.
Joe Magyer, your stock?
Yum Brands. The stock fell on Friday more than any single day in the last 4 years because they announced that comps in China, which is their big growth market for KFC, Taco Bell, Pizza Hut, are going to be down 4% in the fourth quarter. They were up 21% last year, which is a pretty nasty turnaround. Speaking of awesome news out of China, the stock fell about 10%. It's still not cheap at around 20 times earnings, but it's a great business that I'd love to buy at a good price, so I'd love to see it just keep spilling back.
Steve?
Where does Taco Bell or KFC rank in the pyramid of, like, McDonald's would probably be, in my opinion, the number one fast food restaurant. Maybe 2 is Burger King or Wendy's. Where does Taco Bell and KFC fit in? Where do they fit into that
Well, it
pyramid?
depends on whether you define it by, like, restaurant counts or revenue and
Just
what
goodness.
country. Goodness, I'd probably say none of those. I'd say Five Guys. But in China in particular, they are the biggest fast food chain by a wide margin.